Last week is another busy week in the forex market as the geopolitical tension between the Hamas and then the Israel, that is the Middle East, the political tension still has its own massive impact in the forex market. So last week in the economic calendar, we have the drop of the Canadian dollar CPI on Tuesday, and then we have the negative results on the CPI. But this did not have a significant effect in the forex market due to the political tension. And then as oil is rising, Canadian dollar is gaining strength. So that's one of the reasons we don't see much significant impact after the release of the CPI on Tuesday. But things turned south to Canadian dollar on Thursday and Friday as the oil retraced from the high, that is from 89 back to 86. But probably we should still see oil pushing to the upside because the if this war escalates more than we thought it would be, then actually we might see oil going as far as going to 100 or 150 as analysis, and then on Bloomberg said on the AUD part last week, the AUD comes out positive in their unemployment rate report. So but that does not even have any impact because in a time of war like this, in a time of uncertainties like this, you will see the commodity currency apart from the Canadian dollar, which is somehow attached to it. You see something like the AUD, the SND losing track in the market against most of the safe haven currency. Most the number one is against Japanese yen, against CHF. In any uncertainty markets, you see AUD CHF going to the downside massively. AUD JPY are going to the downside massively, and then AUD USD. So any economic report from that particular currency, from AUD and SND during a geopolitical tension like this, will not have a significant effect until the risk on is back to the market. But right now we are at risk off market, especially if you see it on gold, that gold is moving up massively. So gold is still going to 2000 in the next coming days or coming week. Let's see how it goes because of this political tension. But you might see a retracement next week from gold because it has hit a significant resistant level. So what are we looking at this week? In the economic calendar, we have the interest rate statement from the euro, the Canadian dollar this week, and unemployment data from the US dollar this week. We still have the PMI from the pounds and then euro. All of this might actually have a big impact in the forex market. And then we have the stronger US dollar last week until on Thursday, where the Fed speak that there might be a significant rate hold. They might actually hold the interest rate in this quarter. So let's see how it goes right there, because there's a difference between interest rate hold and then pivot. So they will first hold the interest rate before they pivot it. And what do I mean by pivot? That is when they start cutting the interest rate due to due to the economic perspective. So let's see how it goes there. And then on DSY, we talk about this level at 106 right here. We talk about this level last week, where I said that if this level break, you should be looking for the US dollar long, to the upside. But we are still at that level. That level has not broke. So according to this Fed statement, that there might still be an interest rate hold. So we might see a weaker dollar next week. Probably next week we might see a weaker dollar because the DSY has rejected this level multiple times. So probably we might see a move back to this 103.453. So this level I'm looking at on the DSY, because if you check this trend line right there, because so many of you might think that these lines are too much, but those lines are used to probably indicate the support and resistance level. As you can see, all the lines indicate the significant support and resistance level. And if you check the lines, you see that price bounce off the line or probably break some lines. So here too, we should see a slowdown in the US dollar strength next week back to 103.453. From there, then we will see the GBP USD to the upside, the EUR USD to the upside. The GBP USD to the upside, as I've seen the setup on Friday, that probably we should see GBP US dollar to the down to the upside, because last week too, that was my projection last week, but last week was full of range, so markets just going back and forth. But probably this week we should see a significant move in the forex market. And don't forget that the geopolitical tension is still around the corner. It still affects all the currency pair, and in time of uncertainty like this, you should be looking out for the safe havens currency, that is the gold, BTC, the JPY, the CHF, and the probably US dollar is among the safe havens currency, but it has an exception. So probably we should see this going back to 103,456 right here to retest this significant support level. Maybe it will break out or will start going down. Let's see how it goes right there. But as long as price still stay below this 106,712, we should see a move to the downside on the DSY back to 103,453. So before we go to the main analysis of the remaining pairs, so let's check out these economic activities we have next week, how it will affect the forex market. We have the pounds Claremont count change, and we have the euro CPI, which we have the French and German flash manufacturing PMI. So on the flash manufacturing PMI of the French, we have the previous 44.2, and then we have the forecast 44.4, which signify that we should have a better than expected result. That the result of the market sentiment says that we should have the report higher than the previous report. Let's say it goes, including the flash manufacturing PMI and then the service PMI of the French, even the German too. In the flash German manufacturing PMI, the market sentiment predicts a increase in the release of the PMI result. So let's say it goes, only the flash service PMI that they predicted the reduction in the numbers. So let's say it goes, let's see what they will drop. So what they will drop here, if this is better than expected result, then it will support our conversion for EUR US dollar to the upside. But if we have a mixed result right there, but market might still range. But if you have the lower than expected result, then probably markets we might have the EUR US dollar to the downside. But there are some levels, there are some price levels we will watch at when we look at the price. So for now, let's just focus on this. On Tuesday too, we have the flash manufacturing PMI out of the pounds right here. So these two, they predict the increment in number. Market sentiments predict the increment in number. So let's say it goes, maybe there will be a better than expected result or a lower than expected result. But mind you, if this comes out, where is the euro? Okay, if this come out, let's say if this come out at 44.5, is still a good result right there, because the previous is 44.3. If the actual comes out 44.5, is still good this thing for the pounds. And if this comes out 49.4 or 49.5 or 49.6, is a very good indicator for pounds strength. Then it might be a short-term strength right there, but don't ignore the power of fundamental right there. So on Tuesday too, we have the flash manufacturing PMI out of the US dollar. As you can see, next week is a very, very busy week. As you can see, we have a lot of high impact news from the US dollar, from the euro, from the AUD, Canadian dollar, and then probably from the euro. So this is on Wednesday, we have the CPI out of the Australian dollar. This might not have a significant effect, but let's see how it goes when they drop it on Wednesday. Let's see how market reacts to it, and then how we take advantage of it to probably profit from that particular currency. And on Wednesday, we have the interest rate report from the Canadian dollar on Wednesday. So let's see how it goes. So probably they want to leave rates unchanged too. So let's see how it goes from their end. On the euro too, we have the monetary policy on Thursday. They want to leave their rate unchanged too. Let's see how it goes at their end. And on Thursday, we have a very high impact news in the USD. That is the advanced GDP out of the United States dollar, and the unemployment rate too out of the United States dollar. So these two we have to watch out for it. So next week is a very, very busy week in the forex market, but don't forget we still have the geopolitical tension around the corner, which might actually affect the market. Good right here. Good as it is significant resistance level, but my view on gold is we might have a slowdown from here, probably retest this level, then go back to that particular high, break that level, and then we'll see the movement to that particular high. So probably my analysis on gold is to the upside to 2000 and then 60. That's 2060. If you use 1 hour time frame, you will see that price might actually reach, because this level is a very strong resistance level. So price needs to just slow down from this particular area and then probably come for a retest, then we'll have a breakout. So any retracement you see, you should be looking for an opportunity to look for a bullish setup to 2060 in gold. So let's see how it goes right there, because the war is still around the corner, and then as you can see, people are saving their money in gold right now. So let's see how it goes right. Yeah, so probably we should see a retracement here, and then if the retracement comes back to this area, I'll be looking for a rejection and then a bullish setup on gold to that particular area. But if the 4 hour candle closes bullish and then above this level, above 1820, I might not be waiting for the retracement again. That is when I will be waiting. I will enter my buy and then set my stop loss at a price at which the trade will be invalidated. So this is another thing I'm looking at right there, this resistance level. This resistance level can just break like that. So I'm looking at this level right there, 1976. So probably if we have a bullish candlestick close, that is a 4 hour candle above this level, then I will be buying gold at this particular area, put my stop loss below this level, or probably price might also come back here and we test this level, because when gold leave a level like this, most of the time it's come back to pick the other hand then and go to the upside. So if to be on a safer side, my stop loss will be below this significant level right there, will be at this particular area. So let's see how it goes. But if the 4 hour candle closes bullish on Monday, so it gives us a strong conviction that the gold is still to the upside. There is no retracement whatsoever, and then probably the first profit might be at this area, then taking the second profit at 20557. So let's see how it goes right there. That is my analysis on gold. So checking the GBP US dollar last week, or that was last week. Yeah, I told us that this level is a very strong level right here, and if you check the weekly time frame, you will see something at the weekly time frame. That's when I said that we have this very strong hammer candle right here, and then this first rejection, second rejection, creating a weak candlestick, and then we saw price moving and then probably close below, but still not close below 1.21155. So still validate our buy bias. And last week we now saw price closing as a reversal pattern again, which tells us that this week we might have a buy bias and on GBP USD, which is my bias on GBP USD, unless I see price close below to 1.21155. That is when my bias will change on the US dollar. But as the price is doing now, my bias to remain to the upside. If you check the daily time frame, you'll see something to the daily time frame. you see that this candle also closes as a reversal pattern, and this also closes as a hammer candlestick reversal pattern at this significant support level. So what does this tell us? It tells us that we should brace up for a move to the upside in GBP US dollar, but it might actually be a retracement before the continuation. Probably it might be a retracement, but this high will be taken out. Probably it might be a retracement to this particular supply level, then price might actually fall from that particular level. So let's see how it goes right there. Let's see what market will do right there. But if I want to say this, we'll use a Fibonacci retracement and target where price might actually reach before it's actually fall back. So putting it in the high and then and the low, so probably we might see a buy bias to this level right there of 61.8 of this 50% Fibonacci retracement level before we see further move to the downside right there, because it has created a significant low at this area, and then probably if this holds, then price might actually come back to this level or to 50% Fibonacci retracement level. But the supply right here is at probably 38.2 level, but before the 38.2 level, that's where I can see the first supply at that particular area. So let's see how it goes on pounds US dollar. So in the 4-hour time frame, if we are to schedule our entry, so my entry is based on the break of this high right here. That is where my entry is. So if this high is taken out, this part, because as you can see, market just is creating sorry right there. So price is creating a high right there, is a high right here, then another low, then we have another low right there, and then we have another low right there. So which tell us that on the 4-hour time frame, we still have the sellers still dominating the market. But immediately if price close above this level, I'll be looking to take my buy position at that level. So let's say price close above this high, then it means that the buyers have stepped in. So that's when I'll be taking my buy bias. My first take profit will be at this level before my second TP will be at 1.24176. So let's see how it goes, but you just need to take note of how the 4-hour candle close at this level. If the 4-hour candle closes after breaking this level, then I'll be looking to take my buy bias from there and then probably target this as my second TP. Then if price move further, then we are going to 1.27306. But for now, is if price move below this area, my bias will change. If price move below 1.21155, then my bias will change to the downside. That is if the candle that break this level closes bearish below this particular level. So let's see how it goes right there. This is my bias. I'm on buy bias on pounds US dollar too. Just know that this is not a financial advice, it's just for education purposes. So anything you hear is not a financial advice, because I'm not a financial advisor. So let's say it goes on. The next pair we want to check is the Euro US dollar. Euro US dollar to my bias is to the upside, but let's see what they will release on the manufacturing PMI. Even the pounds to what they will release on the manufacturing PMI will actually affect it. If it's better than expected, then it supports our bias, so should be looking for the buy bias on both pairs. So this Euro USD to probably price may actually come back to retest this trend line, or price may get here and then we'll see a move to the upside, because this eye will be taken out right here. This eye will be taken out, I guess, and then this is where my target is. My first target is at 1.07366. that is where my first TP is. And then if you check this level, you see that you have a breakout of this trend line right there. So probably price might just come rally in if price stay below this trend line level, I will not be my bias will change and then might be neutral unless price break below the significant support level. That is where my bias will change to a bearish bias right there. Let's use the 1 hour time frame to check, or probably 30-minute time frame. So as you can see, price still stay above this level right there, but Monday we don't know what will happen Monday, so probably price may just come down and start ranging, and then we'll see a break to the upside at that level. So guys, this is a 30-minute time frame, so my bias to remain bullish on a EUR US dollar. So when we come to the US dollar card, I'm bullish on US dollar card on two things. I'm bullish on US dollar card, and at this moment of uncertainties, you might want to put correlation to one side, because if you want to follow correlation, as the US dollar is strong, the gold should be going to the downside. But in this geopolitical tension surroundings, most of the what is it called? Most of this correlation pairs might not actually work. So let's see how it goes right there, because the Canadian dollar is mostly moved by the oil, and then probably let's see what oil will do. So if oil gain back its traction, because it loses its traction on Thursday by what is it called, by declining from the $89 price level. So if it gains its traction, then we should see the US dollar card probably, and then you see that DSY is as reject at the significant price level, so which means that we might see the US dollar card breaking this level to the downside. But for now, what we can see is to the upside, so probably price might just come and then retest this level, and then if you see a 4-hour rejection at this level, don't hesitate to buy, and then your stop or your TP at 1.38564. But I will be waiting for price to probably will trace back to this particular area. Then if the 4-hour candle closes bullish at the rejection of the trend line, then I'll be looking to buy, take my TP at 1.38564. so please guys, watch that level very well, because if you see this Canadian dollar, the old direction bias is to the upside, and then we have a significant resistance level at this area, and then you don't overlook this particular level too. So let's see it go right there. So probably this I might actually be taking out right there. But if you check the 4-hour time frame, there is already what we call a rejection candle and then confirmation candle here. So this resistance got broken to the upside. As you can see, price break this resistance, first we test it, then reject, then retest at the second time. So probably we might not even see a retracement back to this area. So I'm just saying that if we see any retracement, then that should be an opportunity for a bullish setup. And then on the contrary, another thing I wanted to look at is that this if you put a trend line at that level and you check the 30-minute time frame, you see that there's a significant breakout at that level. So let's see how it goes right there. So my bias is to the upside, and if price didn't come back to retest at this area, then we should just wait for a confirmation candle on 4-hour at this particular level. So let's see how it goes right there. But my first safe zone is that if price didn't go below this level, I might not be looking for a retracement. But if price moves below this level, then I'm looking for a retracement at this, then probably a rejection to the upside right there on US dollar, Canadian dollar. And then the next pair I want to check is the US dollar Swiss franc. This has changed direction. The US dollar Swiss franc has changed direction. As you know, we are in a risk off environment. So in a risk off environment like this, you see the CHF gaining strength at this level. So probably we might see markets coming back to this particular level So probably any retracement you see is an opportunity for you to look for a bearish setup. But if I want to probably say the level I'm looking for the bearish setup, this is the level I'm watching to take my bearish setup. So probably if price retrace back to this level, and I see a rejection candle in the 1 hour forward time frame, then I will enter my sell bias at that particular level. So US dollar says fine, my bias is to downside. And then the next pair is a US dollar JPY. In the forward time frame, if you observe this pair very well, you see that the buyers are already losing their momentum, and then we have the forward candlestick getting smaller. So sellers might actually step in very, very soon, especially when we have the US dollar has not break this level. So with that, we should see the US dollar JPY to the downside. That is my bias on US dollar JPY. So probably price might break this low because this trend line too is slopey. So any slopey trend line is vulnerable to get broken. So probably price might come and retest this 148.766. But if this is safe zone right here, if price move above this level, then still continue with US dollar JPY strength. If price move above 149.981, then I think the US dollar strength should continue. But another thing I want you to know that this US dollar JPY might do is that price might went actually to retest this 150 level, because this 150 level is a very, very strong level. So price might just come here, create a wick, and then come back in. Psychologically be ready for that. You understand? Be ready for the worst, that price might actually come back to retest this 150 level and reject, and you see a weak rejection candle at that particular area. So probably if let's say you sell at this particular area, then you put your stop loss above, then price come back to eat you. So you still need to look at it. If you use a very good risk management, so you still need to look at it that if price come back to this level and close below this level, then you can still enter a sell setup. You understand? And then get your money back and then get more profit. So that is what you should be ready for psychologically, because markets will test your patience, and that's one of the that's how we know you are a strong trader sometimes, because this kind of things usually happen. So you don't have to close your mind from the truth or shy away from the truth. So let's see how it goes. Immediately we have the forward candle close below this particular level, then should see a move back to 148.766 or 147.369. So let's see how it goes. On Canadian dollar, Japanese yen, and bearish, this pair has been playing hide and seek, but probably we have a rejection at this particular area right here. So last week I sold this pair from which level? Okay, after breaking this after this level got broken, then price went to test 10. Actually put my stop loss above this level. Market comes out to hit my stop loss and move back. So probably I changed my bias, but I didn't enter it. So it got so good, price reject at this level, and then we have price coming back to this level again. So in the overall direction of the the Canadian dollar JPY is to the upside, but probably price stays below this 109.444 level. As you can see, that level is a very, very strong level. See, price stay below it. So as price stay below it, I'm looking for a sell setup back to this level, and if this level break, then you see Canadian dollar JPY back to this level. So my bias on Canadian dollar JPY is to the downside. So the next one is Swiss franc Japanese yen. This one has break is at a free what is it called, safe haven, or what will I call it, because we can't phantom any significant resistance level at this particular area. So probably if you are trading Swiss franc JPY, just wait for a retracement and then probably a rejection at this trend line to do what, to enter your bias. That's what I can see on Swiss franc JPY. On pounds JPY, Let's look at what they will drop in the manufacturing PMI on Tuesday in the pound. But if market close above this 182.498 level, then I'll be looking for a buy bias back to 185.742. And if markets move below this area, my bias will change to a bearish bias. This is my safe zone right here. Anything above this, I'm looking for a buy bias on a bounce JPY. And the next pair you want to check is a pounds AUD, and I dropped this pounds AUD last week. That this pair will see it to the upside, and then as you can see, price is still playing at this particular area, still going back and forth, but has managed to close above 1.92148. So probably if you see a retracement back, an opportunity for us to look for a bullish setup back to 1.94933 or 1.97158. So that's what I'm looking at on GBP USD. And if price now close below this significant level, then that's where my bias will change, close below 1.91262. So my bias might change there and it will be neutral. So I'll be bearish if we have this whole level break to the downside, and then this is not valid right there. So if the whole of this level break to the downside, then I won't be looking for a bullish bias again. That is when my bias will change. But for now, my bias is to the upside. You can see the 4-hour candle close, everything still close above 1.92122. So bias is for price to go back to 1.94933. So that is what I'm looking at on pounds AUD, especially in this geopolitical tension surroundings where the commodity currency are weak. So here on pounds card, short-term bias to the upside, long-term bias to the downside. But here I will just be watching the price. I might watch this price for the next 2 weeks to see what the price will do at the level of 61.8 or at the level of 50% Fibonacci retracement level. So that is why I indicate the high and the low and use Fibonacci retracement at that particular area. So let's see what the price reaction maybe in the next 2 weeks or a week at this particular level. So I will keep you updated like we did the AUD Swiss franc the other time. So let's go on euro dollar, Canadian dollar too. Let's see how price react, because I don't think we can say that after this whole bearish move, price will just come and be going bullish and still break this high right here. So price might actually want to retrace to some levels, and then maybe after percent the Fibonacci retracement level, this is 50% Fibonacci retracement level. So let's see if price will reject this level, and then actually in this geopolitical tension surroundings where oil is booming, so probably it will support the Canadian dollar, and we might see more strength coming in to the Canadian dollar. So let's see how it goes right there on EU Canadian dollar. So the last pair I want to check is the SND US dollar. So there is a significant breakout of this level right here, and then next week I'm still bearish on the SND USD. So looking for price to come and retest this level, and then I will short from there. Then my target is at looking for price to just test this level and still bearish. My target is at 0.55788. that is my target on SND US dollar. So guys, this is a weekly forex forecast, and then if you are just joining this YouTube for the first time, do well to click like and then subscribe. So turn on the notification button so that anytime I drop a video like this, you will be notified. So we drop the weekly forex forecast every week, and some learning videos. The videos you can learn some of my strategy. I dropped it weekly. So if you check, you can scroll through the channel, you see where I talked about the fundamental analysis and all. So guys, have a lovely trading week, and don't forget to trade safely. And last one is that there's a link to a verified broker in the description box. you can deposit as low as $5 in the broker, and then they have a swift, fast, reliable deposit and withdrawal. Don't forget, we still have GBP but that is still doing wonders over the months, over the course of, let's say, 4 to 5 months. So if you want to get the bot, do well to join the Telegram channel and signify that you need the bot. So probably you can DM me, you'll see my username on the Telegram channel. So with that, about how you get the bot. The bot is very, very profitable, and then it's not the bot that have a hyper-intensive drawdown, so the drawdown is very minimal. So bye, see you next time.